Hello, everybody, and welcome back to Keeping Your Business on Track. I'm your host, Joe Harris, and today I have a very special guest, Mary Cables. Mary, how you doing?
I'm doing great. How are you?
Good. What do you do here at Morgan Financial?
I am a mortgage loan officer.
Cool. For those who don't know, Mary is our top loan officer, and she's also one of the top loan officers in the county of Brevard, right?
Yes, sir.
And I know that embarrasses her, but because she works very hard and doesn't like all the attention, but we're going to give it to her anyway. She does a great job. Mary, we're talking about a very, I will say delicate, but very important subject today, appraisals. Yeah. Why do we have appraisals?
It's basically to make sure that the transaction as a whole is in the best interest of the lender, in the best interest of the buyer, and the seller is also getting what they should for the home.
So I hear all the time, like, why do we need appraisals? If we have a buyer and a seller coming together and whatever they decide on as a price should be the market price, right? Is that right or wrong?
I could argue both points, Joe.
Okay. Well, argue one of them. How about that? No, but seriously, I do have people in the past that say, well, why does it matter? Because if I decide to buy that property from that person, whatever we decide on is market price.
Well, as far as for speaking to the value of an appraisal, it's because it's having a non-objective third-party person come in and say, hey, I believe that this is what it should be. So it helps either justify or might make you pause on purchasing. Either way.
I mean, I look at it as you can have an uninformed buyer and uninformed seller come to a market price that really isn't market. And if a lender's lending on a property, they want to make sure that if they have to take that property back, the collateral, that it's worth what they're lending on, right?
Very well said.
Yeah. So, and I agree with you. It's like, it's also meant to protect people. But at the end of the day, if the lenders aren't protected, there's not going to be loans.
Yes.
But I got a bunch of questions for you on appraisals. Are you ready?
I am.
Okay. So let's just pretend in this, in the past, as we push values, as prices rise, appraisals look in the rearview mirror, right? They're looking back at comparable properties that have sold within the last 6 months to a year. Sometimes they go outside that range, but they're looking in the past, the rearview mirror. So when we're going up, it's like you need someone to set the trend, but it's also hard to push the value. So anyway, long story short, when appraisal comes in low, because it does happen, what are the options for the buyer at that point, or the transaction in general?
Sure. So I typically, when I'm speaking with my clients and real estate partners, what I will say is there are really 4 options. As far as for the first option, the seller could lower the purchase price to meet the value of what the appraisal came in at.
Okay.
The second option could be that the buyer comes up to the amount out of pocket to the purchase price of the underappraised value. So they're coming up with that additional cash that it underappraised
between
for.
the loan and the original purchase price and the appraised value.
Exactly.
Okay, sorry, that was tough to say.
It was, right? Yeah. That's why I was struggling.
Third option.
And then the third option, maybe they meet somewhere in the middle.
Okay.
So maybe the seller comes down, the buyer comes out of pocket more, and there's somewhere in the middle. Now, with all of those layers, it could mean restructuring the loan.
Gotcha.
And then the fourth option, which is not the best, but it could be, is they walk away from the transaction.
So just to recap, if the appraised value comes in low, the seller can come down to meet that value, because they're going to say, well, if someone else comes to buy the property, it's a good appraisal. I don't think I'm going to get any more than that. I might as well just come down. Second option, you said, is the buyer just says, I really want that property. I'm willing to pay the difference. Third option is the combo of the two. They meet in the middle or somewhere up or down. And then fourth option, they can walk away from the transaction.
Exactly.
Cool. So if you do choose to renegotiate the sales contract, what factors do you think should be considered in that renegotiation?
Well, in looking at the appraisal, the factors could be, the compensating factors that come back on the appraisal. It could make the buyer say, well, I feel that this comp was worth more. And the seller says, well, I had multiple offers. I'm not willing to adjust anything. And so it really depends on the market, and the market we're seeing right now is coming back to multiple offers.
Right. So, it's crazy. So, when you're renegotiating that, if you have no renegotiating power as a buyer, you either accept it or you walk away.
Yeah.
if the seller's not willing to play.
Yep.
Gotcha. But if we're in a buyer's market, it might be the opposite.
Yeah.
We haven't seen that in a couple of years, but it could happen. And then the buyer has more negotiating power, and the seller's going to come down. So they're like, when's the next time we're going to have another buyer? So we might as well go ahead and come down to that value.
Exactly.
So when we're doing appraisals, who, in your opinion, is really benefiting from appraisals, or whose best interest is the appraisal looking out for?
I would say all parties of the transaction. So I would say the buyers, the sellers, the listing agent, the buyer's agent, and us as the lender.
Okay. So, I could make the argue that it's not in the seller's best interest to push values because they're trying to maximize, right? They're trying to maximize what they get out of the property. But they'll end up paying a little bit more taxes and things like that on the transaction. So I could probably come around to your way of thinking on that one. So, Mary, let's say we're doing a VA loan for a veteran and the appraisal comes in low. What are their options, or what happens at that point?
Absolutely. So what the options are is the appraiser typically comes in with a tidewater. And so what a tidewater means is they're basically announcing, hey, having difficulty finding the value of this property. So it allows all parties, as far as the buyer's agent and listing agent, to come together and help provide comparable homes to support what the appraisal should be.
Okay. So that's before the value's even been given on the property. So they say, hey, the value is going to come in low. What comps do you have to support it? And that's the buyer or the buyer's agent or the list agent's opportunity to give them some supporting documents.
Exactly.
And what happens if it comes in low still? They try to, give better comps. It comes in low. The veteran still has those 4 options, correct?
They have those 4 options, and then they also have an extra option.
What is that extra option?
It is called a reconsideration of value through the VA. Okay. And so what they're able to do is they're able, as a veteran, to go back to the VA and say, I don't agree with this appraisal, and here's why.
Okay, so in that sense, can any appraisal be reconsidered, or do they have to have criteria or standards?
So they do have to have criteria, standards, justification as to why they feel that it should be worth more.
Okay.
It's almost like more is better in this instance. You want to give them not only your personal history, but also the property history and other comparable history to support why you're asking them to reconsider.
So I know on the VA reconsideration of value, they actually ask the veteran to write a letter.
Yes.
And I've actually heard, now I can't substantiate this with facts and data, I can only tell you I've heard that those letters can actually sway the opinion of those who read them. Is that true?
I have heard and experienced the same thing.
Really? Okay.
Yes.
So have you been successful at the reconsideration of value?
I have assisted many veterans, and currently I have a 100% success rate with the VA reconsidering the value up to 7% of the underappraised value.
Up to 7%?
Yes.
Okay, so that's news to me. Will they go over 7%?
I have not had them go over 7%.
Okay. Is that written somewhere, the 7%, or is that just a rule of thumb, or is that just what you've experienced personally?
You're now making me question everything, so
okay. Don't question anything. You're fine. Just answer the question.
The question I'm going to give to you is, this is what I've been told by the VA.
Okay.
And this is what I've experienced personally.
Okay, that's what I was asking.
Yes.
That's what you answered. Okay, that was really easy. Okay, so what is the success rate on? You just answered this one. You skipped ahead.
I'm sorry.
You're not allowed to skip ahead.
Teacher's pet.
Okay. So overall, right now in the marketplace, are we seeing some appraisals come in low?
We are.
Okay. Is it more so than normal? Is it, normal is a hard word because, 2020 and 21 were not normal markets. And we saw, I remember seeing a fair amount of appraisals come in low because we were pushing value so fast. But it feels like they've leveled out. Do you see the trend going up again, or what do you see in the market right now?
I would say that we are starting to notice some appraisals come in lower, where I felt like we had a lull here for a while. So
Right.
I would say with the market picking back up, with offers and bids coming in and multiple offer situations, that yes, I would say it is more.
Okay. Are you seeing people paying more than asking price again? Or are we not quite there yet?
I have multiple contracts I just received where they did come in higher than asking.
Higher than asking. Wow. Okay. So we're back to pushing values again.
We are back to pushing values again.
But the rates. I'm like, well, when the rates do go back down, what do you think is going to happen?
We have so much pent up demand. We are going to be in a bidding war situation like crazy again.
You think so? So if you were giving advice to someone that's sitting on the sidelines waiting to purchase right now, what would it be?
Now is the time to purchase.
She even looked at the camera for that one.
I did.
She's like, I'm really serious now. I would agree. I just know that all those people we've pre-approved that keep telling us, hey, I'm going to wait. Well, they're going to wait for the rates to go down, thinking that they can afford more house, but the house prices are going to go right back up.
Yeah, and that's where it's important to stay in contact and also educate them on a weekly basis, letting them know what we're seeing, what's going on, not to instill fear, but just to let them know. Educate.
Right. Yeah, that's so important. It's not fear, it's facts. These are facts.
Yes.
In April of 21, we were seeing multiple bid op situations, 23, 24, 25 different offers on a house. Houses selling for hundreds of thousands of dollars more than asking price. All I can say is right now, if you're looking to buy, don't wait.
Yes.
And I'm not just saying that because we are in the business of lending. I just know it to be what's going to happen when it breaks back open. Those are all the questions I have for today. Whoa, that's not entirely true, is it? I do have 3 pop quiz questions.
Oh no.
So I think, I can't remember if last time you were on that you answered these questions, but I'm going to ask again, okay? Do you have a favorite book?
I do.
What's your favorite book?
It's 7 Habits of Highly Effective People.
Okay, good. That's a good book.
It is a good book.
Is that Stephen Covey?
It is Stephen Covey.
Yeah, that's a good one. Favorite movie?
Favorite movie? I would say my favorite TV show is The Office, and my favorite movie is Office Space.
Okay, well, those are 2 completely separate, unrelated movies, but same theme.
Yep.
Is
the
making fun of where you work.
Exactly.
Great.
The satire of Office Place.
I hope I remind you of Michael. No, I don't. Who's inspired you most?
Oh, well, I would say as far as my daily inspiration, it's my family, my why I wake up in the morning, my kids, my husband. So
it's a lot. So the whole bunch.
My parents too.
Okay, so the family.
And my sister. So yeah, I would say family.
Don't leave anyone out.
Now I'm feeling bad.
Okay. All right, Mary. Thanks for joining us today on Appraisals. Last final words on Appraisals. Market, anything you want.
Well, I actually had a question for you.
Oh, shoot. This is not how this works.
What is your favorite book?
Oh, we're not doing this. We're not doing this.
But I want it. Everybody wants to know, Joe.
All right, fine. Dale Carnegie's How to Win Friends and Influence People has probably been my favorite book. My dad gave me a copy of it when I graduated college, I think. College, yeah. And it's been, I think, I read it once a year. I think it's the best book overall to just how to be a decent human being as well. So,
that's awesome.
Yeah.
The people are satisfied now.
Well, now that we've gotten that out of the way, thank you all for joining us today. Please like, share, subscribe, do all these things. If you found any value in this, please forward it to someone who also might enjoy it. Thank you very much for joining us, Mary, and we'll see you next time.
Thanks for having me.